like to welcome my guest, former Dallas Fed President Richard Fisher. Richard, it's great to have you today. I'd like to also congratulate you. You are the chair of Mayor Johnson, Dallas Mayor Johnson's Recovery Task Force.
Yeah, that's right, here in Dallas. It gives you good insight into what's going to be required to bring the country back up.
Yes, and that's exactly where I'd like to start. You know, as I look around, my state of Illinois isn't necessarily like Texas at this point. It seems mostly to want to stay hunkered down, which has worked. We've lowered the curve, as many other states have, but it seems certain states, whether Georgia or maybe to some extent Texas, seem to be taking a more aggressive route, trying to, at least in part, in a safe way, reopen the economy. Why don't you tell us about that?
Well, first, the governor has what he calls a strike force. And when the governor of Texas, as in other states I would assume, issues an executive order, that becomes the rule. And then the cities and the counties and others have to operate off of it. I know the governor is going to be announcing something new on Friday, further slight reopening initiatives. We'll wait to see what he has to say. I'm actually a member of that strike force, one of the only ones that is in there that, by the way, never gave any money to any Texas politician that are currently serving, so that's kind of rare. But, look, here's the problem, Rick. You take a city like Dallas, which has been the growth engine of a state, which has been the growth engine of America. You shut everything down. You have to make sure the medical side and the C virus side is clear before you open up. The real backbone to Texas, like any other state, like in the United States, are small and medium-sized enterprises. Getting them back up and operating is critical, and I know that's what the governor is planning to address. And, of course, we are also, particularly in the Houston area and West Texas, are being hit hard by what's happening in the energy patch. So Texas gets things done. The order of difficulty is great. All this has led me to conclude, Rick, we're in for a long U-shaped recovery in the United States as a whole. It's going to take time to patch things back together, to get them up and running, to get the financing for working capital for small and medium-sized enterprises, and to lift up the economy, bring people back to work, and start growing again. It's going to take quite a while.
Yeah, no, you know, it does take quite a while. And, Richard, there really aren't any examples in history of shutting down an economy and restarting it. Maybe the only example is the Depression. And the sad part is what really got the economy going, especially the industrial economy at the time, post-Depression, was World War II. And obviously we don't want to go in that direction. So reopening is a dicey prospect with very little history. I vacillate. You know, I look at certain areas of the country where people are getting in legal woes by walking on a beach, but I understand there's police power. States need to protect people's health. Is there a fine line here? Are we walking it correctly? You know, many believe that the American people are adult enough, responsible enough to take more responsibility for more going outside and enjoying spaces in a healthy way, whereas certain governors of states don't believe that's the case. How do we deal with these issues that are different state to state?
Well, that's up to the governors and how they feel comfortable and what their citizens are demanding. Again, you and I are going to have to just listen to the president, to the governors, et cetera. But in the meantime, getting back to what you and I worry about for a living, which is the financial wherewithal to bridge until we get back up and running, is the most important thing. And obviously the government has backed up certain systems. They're being implemented deliberately by the Federal Reserve in particular. They're just getting started. The pipes are built, but the flow through those pipes needs to be properly documented and dealt with. And in the meantime, the markets are beginning to, obviously, are very volatile based around this uncertainty. Rick, I looked at, you look across the commodity spectrum today, it's not just oil, natural gas, heating oil, et cetera, but copper, wheat, soybeans, corn, all down. And, of course, the U.S. dollar is trading back up in strength. People are rushing into dollars. We're blessed by that. It underwrites our ability to borrow and to spend and to allocate to the states and to the communities money from the federal government. And right now we're very lucky that the U.S. dollar is where everybody wants to be. But it'll take time to figure out the answers here. We have to be patient. In the meantime, we have to have the bridge financing to get it done.
Now, Richard, let's pivot a bit. You're one of these versatile guests at this point in time who understands the markets as well as all the issues you've just described. I look at interest rates and I see 10-year note yields toying with a new all-time low. Our current low yield close from March 9th is 54 basis points plus. We've tested it intraday today. Who knows what's good and bad with market signals anymore, Richard? You know, interest rates being low has a benefit, but it seems the lower it goes, the more nasty many business leaders and economists and analysts think that's advertising for the economy in this flight to safety. But who knows how to read any of the signals when the central banks of the world and the Treasury of this country and our central bank have put so much into these areas that even though yields aren't representative of risk and reward, they're certainly trying to help the coronavirus effects.
Yeah, that's a very good point, Rick. It is helpful. It allows us to maintain the cost of carry of these deficits and government debts that are being run up. I'm worried about it long term, but for now, it's a great help. I don't believe my friends and former colleagues at the Federal Reserve have control over the yield curve that far out. This is driven by markets. It's driven by a desire to warehouse and stockpile dollar bonds and also to have dollars in the corporate pipelines around the world, and that's what's driving the 10-year yield. Normally, we would have a nominal rate of about 4% on the 10-year. Now we're close to 50 basis points. By the way, that tells a congresswoman, congressman, or senator you can spend 8 times as much and the cost of carry doesn't go up. It's kind of a good thing, but it's also a dangerous trap.